All right, thanks for joining us. We're here today with Don Lowe. He is the co-founder of Urgent Appraisals AMC, and been in the business over 20 years. Has done countless appraisals. He used to be our chief appraiser here for our appraisal desk at Fund Loans, and just knows a shit ton about the real estate and appraisal business. So welcome to the show.
Well, thanks for having me. Yeah, excited to be here.
Yeah. So, man, I wanted to have you on because the market's nuts, and who better to have than someone who can see that from kind of a granular view and from like a 30,000 foot view, and just really know kind of what's going on with the market and see the trends, and you kind of see stuff before probably everyone else does because you're just in it. You're in it. You see multiple appraisals. You're reviewing appraisals. You've got the experience to kind of know when trends are happening. So I'm stoked to have you on and ask you some questions about the market and just how we can help brokers, when appraisals come in low, if they come in too high. Rarely they come in too high, and that doesn't really matter, but that would be the dream, right?
Yeah.
So tell us kind of what you're seeing right now, as of today. What are we in March, March 24th in 2022?
Wow,
what are you seeing today?
As we all know, once COVID hit, once it got over that first 6 weeks of COVID, it's been skyrocketing nationwide.
Yeah.
And most of my comments will talk about California, the market where I'm based, but it hasn't stopped.
Yeah.
And I thought around the holidays, it might slow down. The rates ticked up a touch, got to around the 4% range for conforming stuff. But this last month or two, it's just as crazy as it's ever been any of this time frame.
Wow.
I'm talking again with
like
the
over the asking
stuff
price.
Listed for 1 million, selling for 1.5, stuff listed for 1.5, selling for 2.2. And then you can imagine on the lower end for the entry level. I mean, entry level now is 900, 800.
Wow.
Yeah.
That's so tell me about like what happens when an appraisal comes in, at a certain value, but then they've made an offer for way more. Like what usually happens?
So the key that brokers, that's who your audience is mainly, is that appraiser needs to make increasing market time adjustments. And some appraisers are afraid to do that.
Right.
Conversely, when the market was going down in the late 2000s, 2008, 2009, the banks and lenders required negative market adjustments because it was continuing to decline.
Right.
So conversely, we're back up, we're going up. So a lot of times it can come in at that value if the numbers make sense.
Sure.
So you have to have really good data, and you have to apply those time adjustments logically. Yeah. But if it doesn't, sometimes it doesn't come in. But I would say about half the contracts I review, because as an appraiser, you have to review every contract.
Yep.
And check the box that you did and analyze that contract.
Yep.
And I'd say a half, maybe 70%, no appraisal contingency.
Wow. Yep.
And that's how they get that deal, because there's 14 other offers.
Sure.
And they're all offering 20% over list.
Mm-hmm.
But if you check that box, then you're coming in with that extra 200 grand, 100 grand, whatever it is short.
Right. Yeah. Because typically, you'll still get an appraisal. Maybe and a lot of these have large down payments, right?
Sure.
Yeah. Like so have you seen any? I mean, I know we had yesterday. We had Austin on, and he's doing a lot more FHA and some not VA, Fannie, Freddie, and FHA. And so they're still doing 97% loan to values and stuff. But are you seeing like the ones that you review? Is it kind of a majority of bigger down payments and less?
Majority, yeah.
Yeah, because he does out of state and stuff. So like here in San Diego, you couldn't really do.
Yeah, nobody's going to take an FHA offer.
Yeah.
Maybe VA, because VA is a much stronger loan than an FHA.
Right.
But even with both of those, the appraisal sticks with the property.
Yeah.
So if you accept an FHA offer, as you know, that's your offer. If I think it's 90 days or something, that appraisal is your appraisal for 90 days.
Oh, yeah.
Unless you have a new buyer coming in. But if it's another FHA, they can use that same appraisal. Oh,
wow. That's tough for a seller to do.
Yeah.
A lot of sellers probably don't know that. I mean, I don't do FHAs. So,
yeah.
But yeah, that's very important to know.
Yeah.
So, ever since then, just to kind of recap, you're seeing it continue to rise. What did it rise in the last 12 months? Was it 20%?
Yeah, it's around 20% in most markets, 15 to 23, somewhere in that range. But most, definitely coastal San Diego and Orange County, LA. Yeah. In the low 20s.
Right.
I'm seeing many at 25%.
Wow. And do you see any signs of slowing?
I'm thinking it might, now that conforming's at 4.7 as of today, but I'm not seeing any of it.
Yeah.
We're getting a lot of it's been a trend ever since this kind of COVID hit of the out-of-town Bay Area, LA buyers coming and pricing out moving up locals.
Yep.
Moving up from $1 million house to $2 million. But these guys come in, sell their house in, Mountain View or something for 3.2.
Right.
And they only owe 600. Yeah. And then so they come in, okay, 2 million cash, close in 10 days. And that's happening time and time again.
Yeah. Yeah. And so are you seeing that? So even though some of them are saying they're going to pay cash, do they still get a loan, or do they still pay cash and they maybe get cash recapture loans?
Yeah. Most are getting cash. And then I've had a lot of deals where they're refining 4 days later.
Yeah.
Either they have the money from their sale of their house, they borrow $2 million from mom and dad, pay them back in 14 days, everything close that loan.
Sure.
Yeah, that's pretty common.
Man, so I also saw something that was a little disturbing, but I think you can shed some light on it. Was for appraisals, Fannie and Freddie are kind of moving towards more of a desktop thing. Like I just saw some video about this, and I was like, wow, I don't know how that's going to affect appraisals because, and you said it might be not as big of a deal, or what are your thoughts on that, where they're shifting to desktop appraisals?
Yeah, so Fannie and Freddie just implemented this on this past Saturday, I think the 16th, whatever that was. And so it's going to be really cumbersome at first because desktop appraisals have been around forever.
Yeah.
No big deal. And there's a lot of assumptions. You're assuming the house is in similar condition as it may be even a drive-by appraisal, same thing.
Right.
You're assuming it's in average condition, let's say. But this way, they're having either a homeowner or like a slow real estate agent that needs to make a couple bucks, and they pay them, $40, and they'll go in and take pictures of the house.
Wow.
Or the homeowner. Now there's technology being parlayed where the homeowner,
like geo stamping it, and
actually like an app where the appraiser's on the app and the homeowner's on the app, and then you can guide the homeowner through. Okay, go around the outside, check out the exterior. You're looking. Oh, can you go up a little bit? I saw something up there. Oh, what is that stain there? What is that? I just redid the windows. Yeah. Just like it would be if you were there.
Interesting.
So I think that if that can be parlayed logically, then that could work and alleviate some of the issues that most people were fearful of on the appraisal side and probably on the collateral side of investment. Right. People buying these loans that are all desktops. Like
they want to make sure that someone did some kind of inspection, right? It was there and saw it, someone who knows what to look for and see if there's cracks in the foundation, whatever, right?
Well, there's lots of things that could be cracks and the true condition, because you picture, we've all seen them on the MLS or Redfin or whatever, and you see the picture and it looks beautiful. Right. The kitchen looks beautiful, everything, and then you go there and you see it and there's dings in the cabinets. It was all Photoshop or just painted cabinets, not new. Sure. The appliances are like 20 years old, not like 4 years old like they look in the photos. Right. So that's, I think, the biggest fear is not having an experienced person or a biased person. Yeah. Obviously a homeowner trying to get the highest value. Yeah. So whether this technology can alleviate that, on the surface it seems, but you have human nature involved. So it's to be seen, in my opinion.
So it's live now, but it's sort of, are they kind of stumbling through it? Or?
Yeah, exactly. So I haven't received one from my private firm. We haven't got one as an AMC. I don't even know anybody that has gotten one. We're 4 days in. Yeah. So we'll see. It's going to be challenging.
But it's not on condos, right? Or 2 to 4 units?
Yeah, not on condo, 2 to 4 units, just single family and conforming, I believe. So locally, that's not a lot.
Yeah.
I mean,
right, for us, right?
But especially for non-QM guys.
Yeah. But like there's been like a backlog of like appraisals, from what I understand, and it may be different now, but maybe 6 months to a year ago, it was real slow. Like it was hard to get an appraisal back right within a certain time frame. Is that still happening? Is it still pretty backlogged?
Not really. Since the rates went up, I'd say late fall, early winter, it's, the government's always slow to react. Yep. And so if this would have been, and nobody foresaw what was going to happen with COVID. People were thinking the opposite. There's going to be no business, no loans being done for a year. But then it got so busy, then and now they're trying to adjust, but now the adjustment is not really needed. Right.
So let's just go to desktop. Well, we don't really need to.
Yeah. So I think you can, regular stuff, you can get it happening. Yeah. Just standard, like a week back.
That's good. Yeah. Tell us about Urgent Appraisals.
Yeah. So we are an AMC, appraisal management company. And we opened last fall, and AMC's in some areas for independent appraisers, they have a bad name. Yep. And the reason why they have a bad name is the business model that AMCs have, at least 90% of them. And basically, they'll get an order from lender A for property X 123 Main Street, and they'll send that appraisal out, and they'll charge the borrower $700, let's say, like an average basic house. And they'll shop that around. They'll send this bid out to 100 appraisers in the county within 50 miles of this house. And whoever can do it the cheapest gets the good deal.
Right.
So my partner's philosophy is that really the best appraiser?
Right.
I don't think so.
I don't think so.
Yeah. The best appraiser is the one doing deals for market rate, takes his time as far as quality, experience, professionalism, and then you get a good appraisal.
Right.
Because everybody's making money on these deals. Yep. The loan officers are making money. Title company, escrow, the investor, the owner of the company. Everybody's making thousands of dollars.
Right.
And they're trying to save $200.
Right, on an appraisal.
On the spread.
On the one thing that really matters on the value, right? The quality of the asset. Yeah.
Yeah. So the way we do it at some other AMCs, a minority of them, and direct lender appraisal desks do, they just have a panel of people they know that are responsive and do quality work, and they send them the appraisal for $500, let's just say. Yep. And they make a few bucks on the end. Instead of shopping it around, and I've been shopped around in my private firm, where I'll get the same order, a bid request on a Monday. I'm like, I'm not going to bid. These guys, they're not going to take anything, less than 400.
Right.
4 days later, I'll see the same bid because they haven't got it cheap enough. Meanwhile, if you went with a decent AMC,
you already had your plate.
You probably have already had it being typed up by the end of that week.
Wow.
So
that's the AMC's in charge of that. Most AMCs.
That's the AMC business model,
and they take their cut and everything. And so your urgent appraisals, obviously, I'm assuming they're fast, right? Is that kind of the goal?
It is the goal. But before we named our company, I did actually look up, because there's a misnomer. The word urgent means fast.
Right. Urgent
only means it's of super high importance and requires immediate action.
Got it. Yeah.
And isn't an appraisal of super high importance to your company?
Right. And needs immediate action.
And needs immediate action, yes. Yeah. So definitely, when we get an order in,
you take action.
We take action right away. It's the number one priority. Get an order in and then get it assigned.
Nice.
And then conversely, when we get an appraisal back, review it and send it to the client.
And you're not, taking it probably as big of a cut necessarily as some of the other AMCs, or you're maybe at least getting that appraiser the fee that they deserve to do the work that they're doing.
100%. And it's the exact same amount. Use that $700 figure, which is about standard that an AMC is charging for a home in Southern California right now. $650 to $725.
Right.
Instead of shopping around, we'll give the appraiser, $500. We try to clear like $150 to $200. Yep. And not shopping around for 2-3 days.
Yep. So you're getting that thing placed soon, right away, urgently, and that's huge.
Yeah.
And I think more brokers need to know about this, because I think when we it's always been an issue for non-QM, is because sometimes you need two appraisals. Sometimes the appraisals come in with disparity. One appraiser comes in at $1.5 million, and the other one comes in at $1.1 million, and you're like, what, you guys both, there's the same comps in the area. There's not, why? And I think that we talked to that because I think that's a big, thing that sometimes happens with brokers and their files. What's your solution to that?
Yeah, that is always a problem.
Yeah.
Because the definition of an appraisal is a opinion of value.
Yeah.
So Bob, the appraiser's opinion is this. Jim, the appraiser's opinion is this. And you could find a case for both of them most of the time.
Sure.
Unless they miss a super obvious comp.
Right.
Or a super obvious adjustment. So it is challenging.
Yeah.
Obviously, you try to minimize that, and the key is to have appraisers have an open mind and realize, oh, I did make an error.
Yeah.
And we'll at least entertain the idea of a rebuttal given to them in a logical, professional, polite fashion.
Right.
Not just, he didn't use it's too low.
Right. What the hell? Why is this? Yeah. And I think that's the first reaction, especially from the homeowner, right? Like if homeowners always think their house is the nicest one on the street. It's the best one, has the best view, has the best da-da-da-da. But appraisers, whether some of them are local, right? And then some are going to be, like you said, from, 50 miles out, right? On a regular kind of AMC situation. So that appraiser he may know what the value's like in that, different area, but they may not, and there's probably a good chance or case to kind of argue that they really don't know as much what's going on as far as like super new, like nuanced kind of things, right? Like the train tracks here in this particular small pocket neighborhood, it's so much more desirable than this one right here, even though they kind of are similar distance to the ocean, but one's a little more, a barrio, whatever. Like it's just a different area, and for some reason this area commands a higher price.
100%.
Right.
Yeah, and that's knowing your market. And that's why the first thing we try to do, when you pull up the software, you can see how far an appraiser is from the property.
Oh, yeah.
So obviously you're going to try to assign it, and we're not bidding it out to 50 appraisers.
Yep.
I'm going to try to assign it to someone that's really
that
close.
Probably knows that
and
area.
I know he's ridden his bike and driven his car down there for 20 years down these streets.
Right.
And he's done the majority of his appraisals, because an appraiser wants to drive the least amount, especially nowadays.
Yep.
Because that's out of their bottom line, to go do an appraisal.
Yeah, because the gas prices.
Gas prices, time is money, and if it takes him 5 minutes to drive there versus 45 minutes.
Yeah.
And so he's gonna know that market. But I like your thing you're saying about the train tracks and the ocean and stuff, because that's the stuff that's so nuanced.
Yep.
And if you're coming from 30 miles away or an inland market, you're not going to know these nuanced areas.
Sure, especially if you don't live there.
Yeah,
right?
and even if I've visited this town 4 times.
Right.
Yeah, 4 times in 30 years.
Yeah, right.
How are you going to know?
That's not the same thing as having coffee every day at the coffee shop that's 2 blocks away, or
Yeah.
Yeah, and hearing all the different things. Even your next door app that tells you like there's a break in down the street. Like you know what I mean? Like you don't know all that stuff because you're not there.
Yeah.
What happened like with AMCs, and why did this all start? Like with, let's just open it up to 50 miles away. Like what? Because it certainly degraded after the crash. I mean, it needed some help during when the crash happened. But what happened like when AMCs, like what caused this unraveling with the appraisals?
Yeah, I think a few factors are involved in that. One, the old way they used to call the HVCC, the Home Valuation Code of Conduct, and that was Cuomo when he was a governor of New York back in the day. It was his term. He was the attorney general, at that point, and he implemented this, and it kind of went nationwide. And so they're the ones who kind of made it so there needed to be a firewall between the loan officer / mortgage broker and the independent appraiser.
Got it.
So nothing wrong.
Nothing
wrong with that. Yeah. So there's no pressure. There's none of this. But kind of going back to my other conversation about most AMC's business models, they are just shopping around for the cheapest.
Right.
And so just like anything, you can get a nice piece of furniture at Pottery Barn and it can look just like the one at Target.
Yeah.
Until you have it for more than one day.
And then it quickly changes.
Yeah. And so the same kind of thing applies.
Yeah.
And so that is one factor. The other factor is the barrier to entry to be an appraiser is enormous.
Yep.
You can become a real estate agent if you take an advanced quick course, take the test, probably 6 weeks from today.
Okay.
In the state of California.
6 weeks.
6 weeks. To become an appraiser, you have to take much more education. And then the hardest part and the biggest barrier to entry is the apprenticeship. You have to be underneath a certified appraiser for approximately 2 years.
Wow.
And probably 80% of that is unpaid.
Jeez.
So, henceforth, 70% of the appraisers, I just saw a stat yesterday, 70% of the appraisers in the United States are 50 years or older.
Wow.
Because unless you are independently wealthy, or your wife kills it, or your husband kills it, your partner, or mom and dad are going to give you $70,000 a year to pay your bills.
Yeah.
How are you going to work for no money for 2 years?
Right.
Or you have to grind away and work at a restaurant at night or something.
Yeah. Yeah.
So that's hard.
2 years. That's not quick.
No. And so that's the biggest challenge. So that's where, when it was super busy and it's ramped up like it was in late 2020 and in all of 2021, it appears there's a shortage of appraisers.
Right.
But they can handle it any other time except for these intense periods.
Yeah, these refi booms and low rate environments.
Like right now it's very balanced.
Okay. Yeah. That's good to hear. So what's the turn time right now in appraisals typically?
5 business days from the day they get it. And this is, again, non-complex, nothing crazy.
Right. Not up in the mountains in Montana or something.
Yeah, don't get me started on Montana or even, anything rural is challenging.
Yeah, I bet.
Because less population equals less appraisers.
Yep.
So.
Tell us about like ADUs. They're trendy right now, right? There's a lot of people trying to do them. There's a lot of businesses popping up to provide ADUs. There's still a shortage of supply of product and ADUs and building materials. What are you seeing as far as like the value add to a house with an ADU? Like, because it can boost your, you can rent them out, right? And you can make income on them. So like, are you seeing people put those on and then have a, significant add to their value, or?
Somewhat.
Yeah.
Yeah. It varies market to market. You have to study that individual market. A lot of times they're not, they make sense to you on paper as far as as a homeowner to put that back there.
Yep.
And depending, are you doing VRBOs? Are you doing a long-term renter?
Right.
Or you just use it as a detached office for your house when your wife is mad at you, spend the night out there.
It happens.
Never to me, I mean.
No.
But so point being, it can add value, but just like a kitchen remodel or new landscaping in a pool, it's not going to be
dollar for dollar.
No.
Yeah. I thought maybe ADU would be the only thing that maybe would be more dollar for dollar, because you're adding income to the property versus like a new kitchen. Now it's just preference, or it's just beautifying the house versus, like now you've created value with income to the property. So is it better than putting a pool in, or like if you want to add, value to your house, square footage usually is probably the best.
I would say so.
Right?
Yes. The way you put that there, that makes a lot of sense. And, if they're getting a loan where they're using that income,
right,
then that's when you can really factor that in.
Sure.
But if it's just a regular refi or purchase and they're buying it, the 2,500 square foot house with an 800 square foot ADU, you're just going to find another comp with an ADU, and okay, the market's
that
built
one
that
sold
in.
for this. Yeah.
So obviously, and then one didn't have it, so you do your.
What is that adjustment for, like, say, like a 600 square foot or 800 square foot ADU? Is it? I mean, it's probably case by case, right?
Yeah, market to market. You look at what other ones have sold, but
if like the same house, cookie cutter match, one had an ADU. Let's say the houses both were roughly about $1 million. What would be kind of that adjustment if it didn't have the ADU, roughly?
Yeah, roughly. Obviously, not studying that individual market. I would say around the $75K range.
Really? So not even close to what it would cost to build one?
No.
Wow.
Yeah.
Okay. Well, I mean, I think people are doing it because they have so much equity anyway, and then they're going to get some income from it, and it's like kind of like their retirement thoughts. Like, okay, this will add income to me as I retire, and maybe in the future make less money, can just kind of relax, go on vacation more, get some steady income on that, because rent's crazy right now.
Oh, it's insane. And again, appraisal, what makes sense and is provable in an appraisal may differ from when you put a stick in the ground and buyers 1 through 13 look at the house and go, I love that ADU.
Mm-hmm.
And people are motivated. We have to look at it through the eyes of a typically motivated buyer.
Sure.
And so just like any other thing, some people would pay $1 million for a view and some people don't care about a view.
Right.
So some of these things are, very subjective, but we have to look at it as an appraiser as what is provable. Like, okay, we have these two comps and it seems about $75,000.
Yeah.
But just like anything, it could be more for sure.
Sure. Absolutely. So we kind of touched a little bit on it earlier about when someone comes in low, right? And you said, obviously don't be pissed off, don't be a jerk to the appraiser. Like, what is the best approach? Because we've all had it happen where value came in low, and we're just like, dang it, you can't. Now the deal's gone. What do we do? I know you've done a ton of rebuttals. What is it? What's the worst thing that someone can do? I mean, or what's the most common approach that brokers take to you as an appraiser, and what should they do? Because there's ways like probably where you're like, I'm not even going to deal with this, and then there's others. Oh, I'll help this guy out.
Well, from our side of the business, we don't call it a low appraisal.
Yeah.
We call it an accurate appraisal. You guys call it a low appraisal.
Right.
We call it is what it is. That's our opinion.
Right.
However.
So you're kind of offending them, but you're offending their opinion in a way.
By saying it's low.
Yeah.
Yes, that's first thing. Don't say that.
Don't say it's low.
The number one thing that I see time and time again, and it just blows my mind, and it tells me who you're really dealing with. Because, when you rebut an appraisal, you should have some other alternate comparable sales.
Yeah.
Close by, similar size, similar age, lot size, all that stuff, right?
Right.
Obviously, that would sell for higher than the value that appraiser determined.
Sure.
But the key thing for any broker or any loan officer, first read the comps that are in that appraisal.
Yeah.
because I would say 75% of the time, one of the comps they will send to consider is already in the appraisal.
And that just makes you think that
you're just like, you're not paying attention. They're just grasping at straws. They're not paying attention. So there's usually no more than 6 in each deal.
Right.
Even if there's 8, just look at the 8 and make sure this one you found, 123 Main Street, isn't comp 3.
Yeah. Right. Yeah, that makes a lot of sense. So I mean, like back to kind of certain people, everyone makes mistakes, right?
Sure.
So what's the best approach? So number 1 is obviously don't say it's low. Number 2, check the comps. And then number 3, if let's say there's a comp that you found that is higher, maybe it's an off listing or, it's a for sale by owner or something like that. And maybe it's like new sales that have popped up that just maybe you didn't want to consider. Like what would be the best approach? Do they fill out a form? I'm not sure. I haven't done one in a while.
Yeah. So normally there's a form. Every AMC or even a direct lender that has an appraisal desk will have a form. And it'll say provide alternate sales,
right,
and or provide other rationale like, oh, you missed 400 square feet, or you didn't add the ADU in, let's say.
Sure.
Or you didn't comp 3 back to a freeway and you didn't notate that, so that would bring that comp up higher.
Right.
So just obvious errors and omissions are the key thing. But you really got to make sure they're truly comparable. A lot of times we'll see on these, and this again, diminishes the credibility of that rebuttal.
Yeah.
Just kind of like when there's a comp in there that's already in the appraisal.
Yeah, it's like, guys,
like
I already have this comp, like, and I did it. I averaged it, right? Like,
yeah. So you have a house 2 blocks from the beach, and it came in at $2 million, and then the 2 comps they sent are oceanfront comps.
Right.
Like, those are not comparable.
You can't compare to that.
Yeah. Just alternately, you couldn't say something should be lower because it's the subject's on the bluff, and then the other one's not. You have to have the same.
Yeah. And so just, do you ever call? Does a broker ever call you, or like?
No,
that's not. It's not. Yeah, you can't talk, right?
You just can't talk value.
Yeah.
So there's this misnomer from everybody in the business that you can't talk to the appraiser.
You can talk to him. Just
talk to me.
Talk about sports.
Yeah, and you can even talk about the square footage of the house.
Okay.
Or you can talk about the lot size. I have 2 title sheets. It says the lot is 1 acre, and you put 3/4 an acre there. Oh, and then maybe that's a factual statement,
right?
Whereas the value is not a factual statement.
Sure.
So that's what you can chat with the appraiser about.
Interesting.
Yeah.
So that's a good to know, because I thought you couldn't really talk to the appraiser. So
yeah, and people are afraid.
As long as you don't say anything about the value, you can just say, look, this is kind of what we see here, and you just do real professional conversation. And
and it's obviously much more agreeable and approachable from the appraiser's perspective if you go through the proper channels.
Right. Go through the AMC.
Go to the AMC. Go
try
through
not
a direct
to do
lender
it,
appraisal desk and do that.
Yeah.
Because then there's people like me in the middle as a chief appraiser who will maybe say, okay, this one's out, just like to the example of it's already in the report. Your 2 of your 3 that you suggest are already in the report.
It'll save you time because AMC will already see that.
Yeah. So, but whatever you do, you just have to have respect because these are professionals and they're grinding away, typing reports, going to inspections, and sure they can make a mistake. I've made many mistakes of the 11,000 appraisals I've personally done in my career, and I'll freely admit it.
Yep.
But conversely, just like anybody else, any other human being, there's going to be that 5% that are stubborn and don't like to admit they made a mistake. And that's where sometimes you hit those roadblocks. And even if it makes perfect sense, it's nothing you can do. As an AMC, as a chief appraiser, as a broker, you're just stuck because this guy's stubborn or this gal's stubborn. Yeah.
Those stubborn people, man.
Yeah. Any business, they're no fun to deal with.
So if let's say, especially dealing with the super jumbo space, right? Like say appraisal comes in at 5 million and then the other one comes in at 4. Do you think what's the best approach there to try to kind of meet in the middle, or to rebuttal that? Can you show the $4 million appraiser that, hey, here's an opinion from another guy, or does that piss you off?
That's against lender guidelines.
Okay.
Yeah, you can't.
I should know this.
No, you're good. I'm sure you know it. That's why you have people that do that for you, that tell you can't do that.
Right.
But because anytime you're leading them to
A value. Yeah.
And that's what you're doing.
Right.
Now, if that one said 3.8 million and you're just giving them the building sketch, so they have to measure the 8,000 square foot house, that's different.
Right.
As far as they've already come up with a thing and maybe the sketch is different, that kind of thing.
Yeah, like maybe you could have someone. AMC usually will review both appraisals and just see if there's any different discrepancies in them, like that way, like the sketch or like square footage. Oh, this guy says it's 4,800. This one says it's 44. Maybe there's something there to rebuttal.
Possibly, yeah.
Yeah.
A lot of the AMC is more of just a cursory review. So if you say it's a 5-bedroom, 5-bath, you want to make sure there's 5-bedroom, 5-baths on the sketch, on the grid, and in the photos.
Right.
That way you're not getting these conditions, 12 hours before funding.
Right.
Oh, there's only 4 bathroom pictures, but there's 5 bathrooms, and then the appraiser's in Hawaii, and you're waiting 5 days.
They do like Hawaii. You appraisers like Hawaii, don't you?
We like tropical.
Yeah. So I think also, isn't it good advice to just for brokers to just get familiar with appraisals in general? I mean, I know when I started in the business, that was one of my first things I did is I grabbed appraisals and just we read the whole thing from top to bottom just to know what was in it. And there's interesting stuff in there. I mean, it's not all boring, right? You got grids and you've got like boxes that are checked, and that's kind of a little boring and standard. But like some of these comments, it's important to read those.
Yeah,
because you guys take time to type in why you do come to certain conclusions and why you come to certain values, right? I mean, talk about that real quick.
Yeah. So, just like it's a part of your business as a broker. That's a part of your business. Very important part, especially if it in the broker world comes in low.
Yeah.
Like it's huge. It can make you from 10 grand commission or 5 grand commission to 0.
Yeah. Quick.
So you might want to know that key aspect, just like qualifying them on their income, just like their assets, whatever you're qualifying them on.
Title reports.
Yeah. All that stuff. So you should know it. And, you can call up an appraiser, and if they're a normal guy or gal, you can ask them a question about, hey, how do you guys do this?
Yeah.
And I've given talks at many different brokerages and lenders, even for realtors, just so they know A, B, C, kind of the basics of it, like how to read it, because some of it's not really relevant, like those boxers are saying, like concrete tile roof versus comp shingle roof.
Right.
But like you got to realize, here's why he didn't use this comp, because it's west of the 5 and this property's east of the 5.
Yeah.
That's a major boundary, and the houses are obviously more expensive
when they're west
of the 5.
Yeah.
Same as locally.
The 101 or
101, El Camino, whatever it is. Mm-hmm. So that's again knowing that market. So those are key things for them to know.
That's good.
Yeah.
Let's talk about unpermitted structures or improvements. It happens all the time.
Oh, so often.
How does that affect appraisals?
Well, the appraiser just reports what is there.
Yep.
So he or she takes a photo of it, says, and we're not going to go into the city and go online. We're not going to spend 2 hours. That's not our gig. That's not our scope of work. If you say it's permitted, I go to the house, refinance, borrower adds on 400 square feet, 2 bathrooms. Hey, this was added on. Yeah, it did it in 2012. And was it permitted? Yes, it was. Awesome. Thank you. So I put in the sketch and I say, per the homeowner, it is permitted. And then obviously the lender is going to say, I need a copy of the permits.
Right.
And the homeowners can get those quickly.
Yeah.
They don't want, probably 80% of the cities won't give an appraiser information.
Right. If it's the homeowner, they can do it. Yeah.
Exactly.
And can you do it online now? Or
some cities.
Some cities, yeah.
Some are better than others. But generally, unpermitted additions cannot be given value. I mean, that's an underwriting decision.
Sure.
Because it's the collateral, and how I understand this is more of a you question, is if they have an unpermitted 400 square foot addition and that house burns down 2 days after the loan funds, the insurance is only going to rebuild the house minus that 400 square foot addition.
Right.
So why would that get value?
That's a good point. Yeah. And it's, I think, also because of COVID, it was hard to get permits, right? Like this has just been
I hadn't even thought of that.
Yeah, just getting them, just people being in the office or not, and just the whole issue with that. But so we see it all the time when there's like extra 2 or 3 kitchens in a property. And you're like, okay, what this? Yeah, we did not know there was 15 kitchens, and this. We had one come in, and there was like I think 16 or 12 kitchens, something crazy like that, and in one house, and it was like, okay, well this room they added a kitchen. This room, they added a kitchen. They're making a ton of money. Like it's cash cowing, right? It's like it's making all kinds of rent. But yeah, they just decided not to tell anyone that they're going to put a kitchen in these, in these units. And yeah, it's hard to get the value. And number one, it's hard to comp that. What do you do when you have these kind of odd properties that are?
It's impossible to comp it. 99% of the time. We just had one with my AMC, and it was in San Francisco, downtown San Francisco. And on title, it's like a 3-bedroom, 2-bath, one of those row homes, 1,500 square feet. They made the family room, they made the bedroom, they made all into separate living areas.
Wow.
Kitchens in each one.
Wow. And
then they had a shed in the back. They put have some guy renting that out. Who knows for how much?
Wow.
Like a nice shed.
Yeah.
But still. And so then the appraiser, whenever they see that, like they'll finish the inspection, measure everything, take photos. But then they're not going to type it up and go, hey, here's what I just saw.
Yeah.
And then, so us as the AMC goes, okay, that sounds, don't do any further work. Let me check with the lender. And then we go back to the lender and say, here's what he saw.
Do you still want us to finish this appraisal?
Yeah. Because obviously there'll be like a small trip fee of a couple $100
versus
but it's not going to be the
thing.
900 or whatever to the borrower.
Yeah.
And then 99% of the time, they're just like, cancel.
Yeah.
Or they'll try the old take the stoves out trick. Like, okay, but I can see the counters in the sink. And
no, that's a desk. That's their office. Yeah, it's especially like, now that some of the trends are going that way, and some of the trends are also going like, what I'm seeing is more and more living facilities, right? Like for retirement or whatever, right? That's probably what they're doing, because there's a housing shortage and people need places to live, right? And so are you seeing let's talk about the housing shortage real quick. Like, have you seen any trends of, builders starting to build, or is it still just builders sort of kind of quiet? What's happening on that front?
Yeah, there are some new projects going on locally, but there's just not a lot of land left.
Yeah.
And they're not building stuff that, someone making $90,000 a year is going to be able to afford.
Right.
They're building $2 million houses.
Yeah.
And it's happening.
Yeah.
And so there's no entry level, here locally, $600,000, $700,000, $800,000. It's just not being built.
Yeah.
Because why would you as a builder have these 14 acres of land, sell houses for $800,000? You can build, a 4,000 square foot house, 2 stories.
2-3 million.
Yeah. So that's why.
Yeah. So after, I remember like before 07, 08, there was just tons of builders building, and it just was a glut of homes. And part of that was, that was one factor that contributed to the crash, among a ton of others, right? The crazy lending standards that we had. But so do you think, like, going forward, as things kind of rates rise, that the fact that there's not a bunch of homes being made is going to kind of help us not, have a crash?
That's a good point. Yeah, that definitely would help. I mean, it's supply and demand economics 101 stuff, and again, that's, hyper local. Now, when you get into, Inland Empire, that kind of thing, where there is still some land out there, there's some building of somewhat entry level.
Have you seen those areas boom, like with new builders, or? Yeah,
they're still pretty steady with builders. Yeah.
Right.
But now Temecula is like the La Jolla of Inland Empire.
Yeah.
Like, and you just keep going north, and it gets, cheaper and cheaper.
Right. Further away from the cities and stuff.
Yeah. So there will be some of that, but the supply, it's land, it's dirt. There's only so much of it.
Right.
That's
especially near cities and stuff. But with remote work and with remote kind of everything kind of being remote, I can imagine that there are going to be some cheaper housing, right? Like in areas that are further away from places like San Diego and all that. So, I don't know. I know there's a housing shortage, right? So, and that's why the ADUs are happening. It's why they're doing more lenient on permits for those, and so it's interesting just to see kind of what. No one has a crystal ball, right? We don't know, but we're in such a different market than we were in 08. Like 08, you had adjusting loans, you had people upside down, who didn't really put a whole lot of money down. But most offers, as you even just said earlier, most offers are with big down payments. Some are cash, some are, investment funds like BlackRock buying up, single family homes around in neighborhoods around, a ton of that. So my case for why there won't be a crash is partly that we have, ATR now, we have to prove ability to pay. We've got, housing shortage. We've got a ton of equity in all these homes trapped up, and people have fixed rates. They're not going to adjust. So unless there's some crazy demand shift, right? I mean, even at a 4.5-5% interest rate, it's still, that's still historically pretty low as an interest rate. And so I mean, my case for no crash is based on all that. I mean, do you see kind of similar, or do you have anything that I didn't talk about that could be potential threat?
I think you covered it well, and I agree with it. And that's, again, Southern California, coastal-ish real estate, because these aren't like these loans you were referring to. They're not the neg-am loans, no money down.
228s with adjustment in 2 years.
Yeah, and they're not in the middle of nowhere, Menifee,
right.
And stated income, Starbucks barista saying they're making $150 a year.
Yeah.
And these are real people with real money and real down payments and real jobs. So, and it's such a desirable area. Would that differ in Missouri or Texas?
Right.
It may.
Yeah.
So, but as long as the rates don't skyrocket to like 7 or 8, I don't really see it. Maybe there'll definitely be some leveling off soon.
Yeah, because it can't go up 20-25% a year. I mean, it's
no, it can't. I mean, 10 years straight now. 2012.
Unless there's runoff inflation that
that people just have to put their money into assets.
Right.
Yeah. But we've gone up 10 years straight now since 2012. It's gone up. So I've been around a while. So have you?
Yeah.
10 years. That's
what
a
goes
long...
up must.
Yeah. Now, is it going to go 40% down like in 08? No way. I'd bet my house on it that I've had it for 20 years. That's not going to happen.
Yeah, because people aren't going to then go pay rent somewhere, right? And rent. Talk about rent real quick. Like what's. I mean, how are people affording rent?
I don't understand. I mean, it is. I mean, stuff that was $2,700 10 years ago, like a suburban track home. Mm-hmm. That's $5,000, $5,300. It's like double in 10 years. Yeah.
Wow.
And I see, and I look at these rents because we're looking at housing sales, 99% of the time, but once in a while you get these assignments with rental surveys.
Yeah, like DSCRs and stuff. Yeah.
And you're like, oh, I haven't done the rents in La Jolla in a while, or I've done the rents in Laguna Beach in a while. So you're looking at it, it's like, for that, $10,000 a month.
Yeah.
So it's amazing, these rents. It's scary for someone kind of just getting started, young people and that kind of thing.
And I'm wondering if it's still hard to find a rental. Like even if you could afford the $10,000, is it hard to like? There's only a few. Right?
Yeah, same supply and demand issue that the sales have.
Just housing in general.
Yeah.
And I think I do see cranes up in a lot of these cities, and they're building apartments and they're building multifamily. So I think that will probably help. We're seeing, some of the renters be able to sort of keep rent at a certain price, but without supply, you're just going to continue, whether it's 10%, 5, 20, who knows what the continuance of that would be until it's just people can't afford it, right? Like these people can't afford to take that new price. I mean, I have a friend that lives here in Encinitas, and his rent is fixed that he's had, I think, for 3 years, and then the person next door is moving out, and they're doubling the rent, and it's like within 3 years, and it's like, we'll see if they can get it, but they're kind of worried. The one that my friend's worried that like if that happens and then their lease comes up, what is going to happen to to their place? Like then will they have to move out because they can't afford it?
Wow,
it's crazy stuff.
Yeah, it really is.
What else are you seeing? Any trends?
I'm still just in awe of these price points and how fast they're going up, and literally you see, but the people that are selling them are there's a couple different profiles, the relocators, Texas, Tennessee, Florida, Idaho, a little bit, that kind of thing. Enjoy the weather. Or it's just people just moving down.
Yeah, they're like downsizing because
they raise their family. Their kids are out of college. Like, why are we living in this 3,500 square foot house?
Don't need it anymore.
Let's go live in a 2-bedroom townhouse down by the beach or by the city.
Right.
But other than that, that's also why there's no supply. Also, because where are they going to go? Sure, you have $1.5 million equity in your home about 25 years ago.
Yeah.
But if your kids are teenagers, and where are you going to go?
Yeah.
You have to do one of those two things.
Sure.
Relocate. Or go down.
Wow.
Or you can't cash out, and that's why people are refining equity lines, that kind of thing.
Yeah.
But that's the biggest supply issue, is that it's so expensive.
There's not options.
There's no way to move around. Like I'm moved from Encinitas to Carlsbad or whatever. It's just you're moving laterally.
Right. Man, have you seen any data on the kind of flight out of California? Like, do you know how many people are leaving a year?
I know. I just heard this yesterday. Also, 5 million people left.
5 million.
Yeah.
Wow. You wonder how many came in other than the border crisis.
Yeah. So I don't know.
Another topic for another day.
I'm gonna drink this.
But 5 million, and there are people moving into California. Sure. But the net effect, right? Like, wonder what that is.
Yeah, I don't know that figure.
But still, that's probably 5 million, and it could be a lot of families, right?
Yeah.
So you're not talking about 5 million people. You're talking 5 million homes, or you're talking about 5 million people?
I'm talking about homes. Excuse me.
5 million homes.
Yes.
Wow. So that could be 10, 15 million people.
Yeah, and so it could be they're not even selling their home too. Maybe they're pulling $200,000 out, renting it, going to buy something for $600,000 in Tennessee.
Yep.
And just they make that their primary residence.
Yep.
So it's interesting times. Like, I don't know where it's going to go from here, but I don't think it's going to crash like we were talking about before. I really don't.
Yep. Maybe level off, right? Where it's like kind of calms down.
Which is healthy, I think.
Yeah. It's like you can make an offer on a house and not be like, what, 500,000 over the price? Like, people will say, hey, it's worth this price. Let's buy it at that price.
Yeah.
That's a healthy market.
Yeah, for sure.
Right? Yeah.
And it's also healthy when someone can go see a house and then maybe go look at it a second time the next day.
Right. And not be so frantic.
That doesn't happen. Like, you got your chance. Now that COVID's lessening a little bit, they're a little more lenient. But when COVID was full force, they go see the house at 10 a.m. on Saturday and they have 15 minutes.
Wow.
And then, can I come back Sunday? No, we're all booked on Sunday. Because, they didn't want 4 families there at the same time.
Right. All right. So, you told us about Urgent Appraisals. I'm excited about that because I think it's definitely helping, get more quality appraisals. We've used a ton of different AMCs, and typically we let the brokers decide. Obviously we let them decide what AMCs they want to use. If a broker wants to get signed up with Urgent Appraisals, talk to them about how to do that.
Yeah, real simple. You just go on our website, urgentappraisal.com.
Okay.
And there's a big button, lenders, click here, sign up.
It's pretty easy.
Yeah, it's a very similar portal that many AMCs use called Appraisal Scope.
Okay.
And so they're the biggest one in the market.
Nice.
So literally it'll take you 4 minutes to sign up.
And can they sign up right now if let's say they're in Florida? Can they still sign up and wait for your license, or do they got to wait till?
They should just probably wait, unfortunately. Yeah, we're working on Texas and Florida applications as we speak.
Okay.
As any licensing, it takes a long time and very cumbersome and a lot of bureaucry.
Yep.
But we're looking forward to the future in those states for sure.
Nice. And you guys got a pretty good panel of appraisers that you've kind of, you've been able to develop over the last year.
Yeah, we got the whole state of California covered pretty well, even like people up by Yosemite foothills and Napa and Sonoma.
Right.
And of course, all the major, San Francisco Bay Area, LA, Orange, and San Diego for sure.
Cool.
Yeah.
And if anyone wants to reach out to you to just kind of pick your brain on why they should use you, or maybe just even your private firm too, like, how do they get a hold of you?
Yeah, you can email me at dlowe, dlowe, at urgentappraisal.com.
Awesome.
And that'll get me reply to you right away. And my cell phone will be on my email reply. We can chat.
Cool.
And love talking about it.
Yeah.
It's my gig.
That's awesome, man.
Yeah.
Well, thanks for coming on.
My pleasure. Thanks for having me.
Yeah, good info. And please like, share, subscribe, and comment, and let us know if you have any special guests that you'd like to have on as well. And yeah, let's hear from you. And please share this podcast if you enjoyed it. Thanks for listening. Thanks for watching.